market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. Happy Fed Day. It's a thing. I'm Francine Lacqua here in London. Now, the Fed widely expected to lower interest rates today after holding borrowing costs at a two-decade high for more than a year. Now, Ray Dalio of Bridgewater Associates and JP Morgan's chief executive, Jamie Dimon, had their say ahead of the big decision.
25 or 50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse and that affects more people, then it's probably 50 basis points.
It matters to me because I have to listen to all that people yapping on TV all the time about something that's almost irrelevant. I mean, they're going to do it, 25, 50 basis points. It's not going to be earth-shattering. It doesn't mean that much. I mean, I think they need to do it. So I'm not, I think Jay Powell does do a great job, but it's a minor thing.
I feel seen. Joining us now is Christian Keller, head of economic research at Barclays. Christian, I mean, the wider things, right? I don't know whether it makes a difference. 25 or 50 basis points probably won't push the U.S. into a recession if they get it wrong. But actually, it's the tone. It's the data that they look at that the investors may be mismatching.
Yeah, I mean, let me say up front, I think it is correct that, the bigger picture, what matters in the last few months is we move from a world where most central banks are still very, concerned about inflation. That is gone, and we're more concerned about growth. So that's the first thing, and the Fed will start, and, the ECB already did, as did the Bank of England, etc. Now, calibrating how much you do is obviously something that is getting people excited. Up front, we think it's going to be 25, and frankly, I think it's not only what they will do, but also what they should do.
Right.
If you look at communication before the blackout, Waller, Williams, everything pointed to 25. After the CPI print last week, markets felt very secure about 25. They priced 27 or so. And, then there came various news articles. And now we're having, I think, more than 50% priced, for 50. And it may be a situation where the Fed wants to push back, even though typically it doesn't. It likes to confirm what the market is pricing. Yeah. This time, maybe a situation where they want to push back.
But, Christian, I mean, there have been a number of opportunities where actually the Fed kind of pushed back on a market narrative that inflation is fine, right? We could see a resurgence, especially with everything that's happening in geopolitics. We could see a resurgent inflation, and they cut by too much, and they'll be in trouble.
Yes, it's also about what's your signal. If you signal 50, and then remember, there will also be a new set of projections. And it's probably easier to do 25 and do that with a dovish signal rather than do 50 and then what people say will be a hawkish 50. But how will you justify that? What do you put in your projections? So I think that speaks for 25. And as you say, inflation for now, it looks clearly for the last few months went in the right direction. The last print showed that service price inflation is still, relatively sticky. Peak core PCE inflation we see at the end of the year at 2.7, and they probably will validate that today in their forecast.
But how much do you worry about the labor market, and how much do you worry about China as a force that could actually depress the world economy?
The labor market is now at the center, and there's been clearly a cooling in the number of jobs that are being created, and several, of the ratios you look at point towards cooling. But on the other hand, there has been a lot of labor supply. So one reason why the unemployment rate went up was a lot of additional labor supply through migration. And so we think the balance there is, as I said again, to do a 25 and to wait and see. China is important. China is slowing, and we see it now. We look at energy prices and general commodity prices, where China plays a very large role. Those are coming down because China demand is missing. They're trying to export their way out of this, which, given the size of their overcapacity, is actually a problem itself because others don't want to absorb all the exports. And what they do not do enough is stimulate their domestic demand.
Christian, overall, I mean, we're talking about a soft landing. And again, there's various definitions of a soft landing. But how hard is it for the Fed to really manage to engineer a soft landing?
Yeah, it is. It's very difficult for them. We think they have a good chance to do it, but ultimately it depends on many other factors than just the Fed. And, when we look at the trajectory of data so far, in particular the U.S. consumer, it looks still pretty healthy, and it was said earlier, that mortgages are an issue, but mortgage rates actually have come down if you look at it. Financial conditions, if you look over the last few weeks, really, the dollar is weakened, the stock markets are up, mortgage rates are down. So actually, there's not a tightening of financial conditions overall. And we think as long as the consumer remains quite resilient, there's still net wealth added to the U.S. consumer's balance sheet. We think the Fed stands a good chance to actually engineer a soft landing.
We'll talk a little bit about some of the economic policies that have come up in the U.S. election a little bit later. But how does it actually change the way that you look at the economy? I mean, is it literally one blueprint if we have Kamala Harris in the White House and another one for Donald Trump, and the world economy looks much different?
Well, the blueprints are certainly very different. And Harris versus Trump are almost, in some respects, very opposed policy approaches, right? Higher taxes, lower taxes. And then the question comes, what could they actually implement if there's a split Congress? And then it gets very, very difficult, and you have to kind of really weigh what is realistic. But the one thing that is realistic is the implementation of tariff hikes. And that's something that's high on Trump's agenda. And we did some calculations, and we think that would make a big impact if they were implemented as they say it.
All right, Christian, keep it there because we'll have plenty more from Christian Keller. From Barclays, we'll talk about the Bank of England, and we'll, of course, talk about oil. But UK inflation remaining steady at 2.2% in the year to August, and that was pretty much in line with analyst estimates, but below the Bank of England's forecast. That, therefore, paves the way for more interest rate cuts this year. Let's bring in Dan Hansen, our chief UK economist for Bloomberg Economics. So, Dan, what are you expecting? Could they actually cut tomorrow? And good morning.
Morning, Fran. I don't think they will cut tomorrow, no. I think there are a few things to take away from the print this morning. I mean, the headline services number, it did pick up, core did pick up, but if you look beneath the surface, it was driven by some volatile categories, particularly airfares. I think if you look beneath the surface, look at underlying measures of services inflation, there's probably enough in this for the bank to remain pretty much, send the same message that it sent in August, that more rate cuts are coming. But the pace is going to be pretty slow. So as of tomorrow, in terms of interest rates at least, we expect to hold. We expect the next cut in November. I think the big interest tomorrow will be in the quantitative tightening decision, how much the bank decides to reduce its balance sheet. We expect £100 billion reduction, which is the same as 2023. I think the risks are tilted towards a slightly bigger reduction in the balance sheet.
But, Dan, I mean, and I know Governor Bailey always pushes back at this in press conference, but there is a gravitational pull from the Fed. So what does the Fed does, later today, does that influence the Bank of England tomorrow? We also have that big budget October 30th.
Yeah, I think to some extent the bank will definitely have an eye on what the Fed's doing. But I think it goes to what Christian said around messaging. It depends what if the Fed sort of signals there's something wrong with the US economy, then I think the bank will take notice. I always go back to 2001, where the US economy sort of went into recession. The Bank of England put in some insurance in terms of rate cuts. The UK economy didn't go into recession, but clearly what the global economy does matters for the UK because it's a small open economy. So, yeah, definitely Bailey and the bank will have an eye on what the Fed does, but I don't think at least the immediate term it's going to have an influence on what they do this week.
Dan, thanks so much. Dan Hansen there from Bloomberg Economics. And Christian, I mean, we look at the UK, and it's incredible, actually, the trajectory of growth over the last 6-7 months. I mean, we're in a much better position than we thought we would be. And the Bank of England, again, cut without much waves.
Yeah, I mean, and, so far things are moving as expected. I would fully agree with Dan. We don't expect they would do something next week. On tomorrow. Thursday. Yeah. on the tomorrow already. The Fed plays a role, but there's a budget. I think these political developments, we mentioned it in the U.S., but also, they probably want to see what the budget, whether there's any commotion around that. Inflation has been stubborn. That's why they're careful. If you think the last decision in August was still quite split. Yes. So to move from that to suddenly surprising the market with a cut would be quite something. We don't think that will happen. But, the big picture is the next meeting they will then cut. And we think then together with the ECB and the Fed there will be a cutting cycle by the core central banks. That is really what matters. But
on the Bank of England, do we need to talk a lot more about the balance sheet? Because, again, that goes also to financial conditions in the country.
Yeah, that is, but again, it seems he mentioned the 100 billion that seems to be foreseen by everyone. So again, it's probably relatively little surprise there, which is probably what they want. You don't want to have any commotions in markets and any unexpected developments. But the balance sheet does matter, and let's see what they, how they will do some of the accounting procedures. That will be quite interesting.
Okay, Christian, thanks so much. Christian Keller, head of economics research at Barclays, stays with us, and we'll talk also about oil. Coming up, Hezbollah points the finger at Israel after thousands of pagers exploded across Lebanon, leaving almost 3,000 injured. That story is next, and this is Bloomberg. Welcome back, everyone. Now, Hezbollah has accused Israel of orchestrating coordinated attacks in Lebanon, which killed several people and wounded almost 3,000. Now, pagers, which Hezbollah members have been using to communicate, exploded across the country yesterday afternoon. Well, yeah, Israel is yet to comment on the attacks. I'm now joined by Bloomberg anchor Jumana Barcece. Jumana, I mean, it's incredible just to understand exactly what happened. There have been a number of things said, you know, on the media, social media. Some of it hasn't been verified. What do we actually know?
Yeah, I mean, in terms of the reaction over here in the Middle East, people are still in shock as to what went down yesterday afternoon. What we do know is that around 3:30 p.m. local time, a series of explosions took place from these handheld pagers that were held by Hezbollah group members. So 2,800 people were injured, 9 people killed, including a child, according to the health ministry, and 200 people are in a critical condition. By the way, including the Iranian ambassador. The Iranian embassy tweeted a short while ago that his treatment is progressing well. So he was indeed injured in that attack. Now, both Hezbollah and the Lebanese government were quick to point the finger at Israel. The Lebanese prime minister said that this was an attack on Lebanon's sovereignty. But Israel so far have declined to comment. There has not been an official response yet. But within Lebanon, this has placed the country on a high state of alert. There was a lot of chaos around the hospitals yesterday as the ambulances were flooding in. Many of the wounded would have lost their fingers. The casualties were targeted around their waist area. And so the repercussions are very broad, including the fact that an attack of this nature is unprecedented, both in terms of scale, but also in terms of how it was executed. And so what we're seeing now, Francine, is this new level of warfare. We've moved from a hot war to a cyber war.
So how could the pagers have been compromised?
And that is the million-dollar question. Many cybersecurity experts were looking into what happened yesterday. At Bloomberg ourselves, we reached out to the telecommunications minister of Lebanon, and he said that the cause would have been overheating batteries. Now, we put that question to experts, and they say that it is unlikely that an overheating battery could cause that much damage. What is more likely is that the devices themselves were tampered with at the point of manufacturing. And what we heard from this morning was from the Taiwanese manufacturer. It's become a national security issue in Taiwan as well. The government, the ministry putting out a statement saying that they did not manufacture these specific devices. And likely what happened is one of their distributors within Europe, they didn't say who exactly, would have somehow allowed for an interference to have taken place at the point of manufacturing these devices. And unclear again at this point how that would have happened. But what we do know is that explosive material would have been inserted into these pagers, say 10 grams to 20 grams worth. And military experts say that that would explain the explosions, the simultaneous explosions that took place yesterday would have been triggered by one message being sent to all of these devices. The other big question, Francine, is why Hezbollah operatives were using pagers in the first place. And this goes back to a directive from the commander-in-chief, Hassan Nasrallah, back in February. He told all of the group members to no longer rely on their mobile devices just in case they get intercepted. And so you fast forward to today, and of course, that is a decision that he no doubt regrets.
Jumana, thank you so much. Jumana Barcece there with the very latest, of course, on what's happening in the Middle East. We're back with Christian Keller, head of economics research at Barclays. Christian, I mean, this goes back to some of, I guess, you know, the questions that we were talking about, which is if there's an escalation of war, if there is something happening with the price of oil that for the moment has gone down, what does that mean for the global economy? It's very difficult to ignore these escalations, but it's not really translating into markets at all.
I mean, as an economist, if you look at oil price coming down, you wonder, is it supply or demand? At the moment, I think it's clearly a matter of a low demand and expectations for low demand, in particular because of China, which by now, not only for commodities, but also for oil, is really the key marginal marginal country that is crucial for demand. So it's not a good sign. It means the global economy is slowing. I think it's also a sign, however, that the dependence on the Middle East for oil supply is coming down. Saudi is still very, very important, but probably markets see it isolated from this conflict. And then there's a lot of supply elsewhere, not least, by the way, from the US, which is, now energy independent. I think this makes this conflict very different from the classic Middle Eastern conflict in a way of the past.
I mean, it seems that if you look at geopolitics in general, it goes back to a couple of questions where it says, U.S. exceptionalism, does that remain intact? Some of the, I guess, industrial, policy wars, is that going to escalate? How much do these big questions actually impact on how you see the world economy in 2, 3, 5 years from now?
I think it impacts it a lot, and this is what clients ask as well. How should I think about inflation, about growth in a world that fragments further? And we touched upon the question of Trump's proposal for tariff hikes. If they were to do what this team in a way proposes, it would be a fundamental shift on the way how the U.S. looks at free trade, and thereby how free trade will likely develop in the world. And if you think the impact of globalization, if you want to call it this way, on goods deflation that we've seen for decades, on the division of labor, etc. If you turn these things around, they have an impact, and they will be much more important than the question of how exactly will the Fed now calibrate their rate cuts today.
Right, but also because fiscal debt trajectories, be it the U.S. or elsewhere, just seem to be unsustainable. So what does it mean with what kind of economies we're left with? Is it a little bit too soon to find out what happens next fiscally for maybe politicians that don't want to take some of the difficult decisions now?
Yeah, I think that's a very important question. I think in the U.S., if you look at fiscal policy, and you look at the fact that none of the presidential candidates actually has any plan to reduce it. They're not talking about it. And in a moment of growth, in particular high nominal growth, which the U.S. still has, good real growth plus inflation, it doesn't seem to be a big question. There's a lot of liquidity still around. But we think ultimately this will come to a point where markets will care. And, probably risk premium at the longer end of the U.S. yield curve will have to increase.
All right, Christian, thank you so much, as always, for joining us. Christian Keller, their head of economics research at Barclays. Much more to come, and this is Bloomberg. So as we were just discussing, oil prices edging lower as traders assess indications of higher U.S. crude stockpiles, sustain tensions in the Middle East, and the likely course of the Fed's rate path. Now, staying with oil, and tonight's episode of Leaders with Lacqua Goes Green features the former chief executive of BP, John Brown, who is known as the Sun King of the industry. Well, he spoke to me about the future of energy and why oil sanctions against Russia are proving ineffective and potentially dangerous for the environment.
Sanctions on oil really don't work unless the whole world is behind them, and they clearly weren't behind these. So people find ways around it. And one of the ways they find around it is to find ships that wouldn't necessarily be used to transport oil, or would have difficulty getting insurance, things like that, and fill them up and transport the oil. So inevitably, with this sort of activity, the risks of a spill have gone up. Surprisingly, to the best of my knowledge, there hasn't been one, but the risks are there. The risks are always there. It's the biggest issue with oil is spills from tankers.
Do you worry about something like a big environmental disaster, or it's impossible to...
I do, but you can't, there are so many different actors here, so many different actors. And when they're working outside the rules established internationally, anything can happen.
Well, you can see that full interview of Leaders with Lacqua Goes Green airing at 9:30 p.m. New York time tonight in the U.S. and at 6:30 p.m. on London time on Thursday. Coming up, Ursula von der Leyen's new team of EU commissioners face a grilling by the European Parliament before they're confirmed. I'll be speaking to a French member of the European Parliament next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The most eagerly anticipated Fed meeting in years. A cut appears certain, but by how much remains an open question. Google wins its latest court fight with the European Union over a €1.5 billion fine for thwarting competition for online ads. And Hezbollah accuses Israel of planting explosives in pagers that killed 11 people and wounded thousands more in Lebanon yesterday, increasing fears of an all-out war. Well, markets pricing a slightly higher than 50% chance of a half-point rate cut by the Fed today. Well, Bridgewater Associates founder Ray Dalio told Haslinda Amin the overall picture of the U.S. economy warrants a smaller move.
25 or 50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. Okay, Fed policy. What does the Fed have to do? Fed has to keep interest rates high enough to satisfy the creditors, that they're going to get a real return without having them so high that the debtors have a problem. So now if we're looking at this, whether it's 25 or 50 basis points, 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse and that affects more people, then it's probably 50 basis points.
What is the state of the U.S. economy? I mean, we're talking about 25 or 50 based on the assumptions of how the economy is doing.
Okay.
From the data that we've gotten so far, does it justify 50? I mean, what does it say?
We have a model for estimating what should be. The economy right now is very, very, very close to an equilibrium level in many ways if you're just looking at what is and you're not looking at the debt problem. And it would look like there should be a modest easing of interest rates and a move gradually to a more positively sloped yield curve, what we would call normal. It's fairly normal, except it's not normal in the way that it's so skewed.
Well, that's Bridgewater Associates founder Ray Dalio downplaying the prospect of a 50 basis point cut by the Federal Reserve today. Now, Google has won a court fight with the European Union over a €1.5 billion fine for thwarting competition for online ads. Now, some reprieve for the tech giant after losing a separate judgment last week from abusing its monopoly powers. Joining us with the latest is Oliver Crook in Berlin. Ollie, run us through the details of the case.
Yeah, good morning, Francine. We've had such a litany of big cases out of Brussels over the last couple of weeks. The other two last week from Apple and Google really going the other direction. This one, a bit of reprieve, as you mentioned, from Google. This is really an antitrust case. This has to do with basically other third-party people like Microsoft and other companies basically not being able to get their advertisements shown in Google. The EU Commission said this is anti-competitive behavior. Google has said that there were a ton of issues with the case, that they were very unhappy with it. They also accused the EU of treating them as quasi-criminal in terms of the scale of the fines. And what we got from the EU General Court now is to overturn that decision so they will not have to pay that €1.5 billion fines. We should say, however, that this is not necessarily the final word. The final word is the European Court of Justice. We should say that in the tax situation that we had last week with Apple, where they were forced to pay €14 billion, this very same court had reversed it. Which means it then went to the European Court and it was then upheld. So this may not be the end, but a bit of reprieve. And for Margareta Vestager, just another one of the many cases that she brought through her long career, which ends, by the way, very soon.
Ollie, staying with the EU, Ursula von der Leyen has proposed her top jobs for the European Commission. So where does the real power of the next group actually lie?
Yeah, so the real power lies, I think, mostly with Spain, I think is what is the answer to that. So you have the role that was given to Spain to the commissioner there was both competition and competitiveness. So both the Vestager role that we've just been talking about, this is one of the most fundamental, one of the most powerful roles within all of Europe because it has a really big stick. As we talked about just now, this is the role that can impose billions and billions of euros worth of fines. What she has now added to this commission is also the competitiveness element, the sort of anchor to the Draghi report and trying to execute that and execute it in a sort of carbon neutral way. So this is an absolutely huge commission. It was very important for Ursula von der Leyen to put women in places of extreme power within this commission. We should also say that Séjourné, who's also getting a portfolio that is akin to this, really focused on the new industrial policy and competitiveness. He'll be overseeing things like the Capital Markets Union. So these two commissioners together will really be sort of serving as, Francine, if we may allow ourselves, the sort of Draghi Commission of trying to execute this plan for European competitiveness?
Yes, so many questions to follow up on. Ollie, a terrific briefing as always. Thank you so much. Oliver Kirk there in Berlin. Coming up, 25 or 50? That's the question everyone is asking about the Fed decision today. So we'll look ahead to that next. And this is Bloomberg. Now, the European Commission President Ursula von der Leyen has drawn the battle lines for her second term in office, unveiling a top team which she hopes will make the EU more competitive. The new lineup includes key roles for commissioners from France, Spain and Italy, though they face hearings in the European Parliament before they're actually confirmed. Well, I'm delighted to be joined from Strasbourg by the French MEP, Stéphanie Yon-Courtin, a member of the Renew Europe group. So thank you so much for joining us. There are many, many questions on, for example, France's Stéphane Séjourné. He seems to have been getting quite a big role in this new commission. How important is this new enlarged role to the interests of France?
Well, thank you very much for having me. And yes, of course, I mean, Stéphane Séjourné will have has got a huge portfolio, and this comes at a crucial time in the EU, and it's very important to carry on building what we've done so far and what we've achieved during the past mandate. So we already moved mountains. And we placed Europe already at the forefront of digital regulation and more sovereign Europe in areas like health and defense, especially during the pandemic and in support to Ukraine. And of course, we've got massive challenges ahead. And Europe strengthened its autonomy from big techs with groundbreaking legislation. It's now time to deliver, to implement the regulations. And so Stéphane Séjourné will definitely have a key role in that respect.
But the EU is under really a lot of pressure to boost competitiveness to face the US and China. What do you think needs to be done urgently?
Well, we have, as I said, massive issues ahead of us, and to name a few. I mean, first, transitions are very important. We need to deliver. Deliver means investing a lot, and it requires money. Public money is rare, and we will need to have the second leg when it comes to creating basically the capital markets union, which will be one of my top priority, meaning making sure that we are fit for assuming this transition. Competition rules also, you've just talking about the last antitrust fine against Google. It's clear that Europe can no longer operate with obsolete frameworks, and we need to revisit this. This will be important. Third, industrialization, and also, as I said, within that, at the core of it, financing. And financing needs have never been higher, 800 billion euros per year, according to Mario Draghi's report. So key role for Stéphane Séjourné and for the next European Commission.
I mean, we saw the Draghi report. Do you think Mr. Draghi is being way too dramatic when he says, look, the EU risks unraveling if it doesn't push through with what he said? Would you, for example, move forward with joint debt?
Well, it wasn't too dramatic. I think his diagnosis is unanimously shared and is realistic. It's, I would say, now or never. And so first, we, of course, need to boost EU innovation. And we need to, as I said, figure out how to finance. The common debt is one thing, but also what we need to do is, as I said, mobilize private money and making sure we have a more fluid, a more harmonized capital markets union. It means that we need to up our CMU game, I would say, and mobilizing private capital means many things. And for example, I'm now working on a retail investment strategy, which would help to kind of reallocate massive savings of European citizens to kind of invest in the real economy, in SMEs, in companies, to make sure we have a more dynamic market. leading to more competitiveness and prosperity.
But if you look at the amount of money, and I understand you want to capitalize private money, but the amount of money that Professor Draghi is talking about is to the tune of 800 billion a year. Where do the countries find that kind of money?
Well, as I said, I mean, public money is rare, and so we need to find fresh money and make sure that the markets follow us. And as I said, I mean, since the COVID pandemic, but not only, you know, in EU, there's a tradition of savings, massive savings from the European citizens, and it's now very important to make them invest more on risky but more interesting investments and markets to make sure that we have this fresh money to be able to have this fresh money to finance the green transition, the digital transition, but also defense in Europe and many other challenges ahead.
So in France, the budget deficit and ballooning debt is definitely a cause for concern. We have a new prime minister, and he's taking his time to actually come up with a new government. Do you worry that there's going to be austerity measures in France, even though there's a risk of a no-confidence vote against Prime Minister Barnier?
Well, the thing is, in France, we need also to, strike this balance between making sure that we reduce this huge and massive debt and deficit that we cannot afford, because otherwise we will pass it on to the next future generation. And at the same time, making sure that we invest in prosperous, in technological markets and sectors as well. So now, I mean, I wouldn't speak about austerity measures. I would speak more, as I said, on responsibility, accountability to people. And I mean, it's a really hard task, I know, for the new prime minister. And I hope everybody will be, on board and responsible to make sure that we find, at the end of the day, the right method to enter into a more reasonable budget for France and for Europe as well, because, as you know, France is a key member state in the EU within these 27 member states.
I mean, it's it feels like a very delicate time politically for, world leaders, but especially European leaders. Why do you think the European project is losing so much attraction for EU leaders?
Well, for many years, Europe has always been seen as responsible of all the issues and all the problems. Now, Europe has a huge part of solutions, and I think I wouldn't say that Europe is losing credibility or grants or interest, because, I mean, if you look at Michel Barnier's credentials, I mean, he's a very European man, I would say. He has negotiating the Brexit. He used to be commissioner. He's well known. And, I think his nomination in France is just showing that Europe is very important for France, and France is important for Europe, and that Europe is kind of regaining grants and credibility within France. And this is very important because there are many, as I said, many challenges ahead, and many of the challenges cannot be dealt nationally. And the best level ever is Europe. And I think people tend to understand that. So I think Michel Barnier and also Stéphane Séjourné, who knows very well I would say the European machine, are very important and are very key actors in that respect. And of course, we now need to find the right method, which is, the method of compromising, which is somehow very difficult in France, because we used to have this culture of two pillars parties, right, left. And I think Emmanuel Macron, in this way, helped a lot in changing the mind and the methodology. It's now time, given the high difficulties we face in France, to sit all together and to work in a method where we dialogue, we negotiate, where we find a compromise. Otherwise, it's going to be devastating, really, for France, for Europe, and for the whole world.
Stephanie, thank you so much for joining us. Stephanie Yon-Courtin, member of the European Parliament, of course, joining us on a very important week for Europe. Now, we turn our attention to the U.S. as traders weigh just how big the Fed go with a rate cut today. Joining us now for more on this is Bloomberg's Ven Ram on the MLIV team. Ven, 25 or 50? I don't know if there's anything to convince you otherwise.
Well, the markets are pricing 60% chance of a move higher than 25 basis points. But I think it's going to be an extremely finely balanced act for Powell. On the one hand, at Jackson Hole, we saw that he was extremely dovish. And also, he's concerned about falling behind the curve. So I think that, a 50 basis point cut isn't an unlikely scenario. But on the other hand, the Fed under Powell has been a consensus-driven beast, which means that he has got to go around and find consensus among the members to shoehorn in a 50 basis point move, which I don't know whether he had it. And the other message that a 50 basis point cut will send is one of alarm that the Fed is behind the curve. So it's going to be a finely balanced act. Regardless, it's going to be the dot plot that the markets will move on to quickly pivot to.
So, Ven, what can you tell us about dollar? Is a further dollar drop going to be limited?
Well, I think that the dollar has plunged 5% so far this quarter, which I think is a bit of an overstated drop because the dollar is right to factor in the weakness that in the real rates that we are going to see once the Fed starts going. And I think that, at present conditions, the dollar is fairly valued. And I think that, if we are going to see a modest correction upward in the dollar after the drop that we have seen this quarter, especially if the Fed's dot plot is not as dovish as the markets are expecting.
Ven, when you look at some of, I know then we go on to BOJ. It doesn't get more exciting than this when it comes to central banks. How much focus will you have on the yen carry trade?
Well, I think that, we are going to hear from UEDA this Friday that, look, the BOJ is going to raise rates if the Japanese economy evolves according to forecasts. And certainly what we have seen is that inflation is firm. The economy is ticking modestly higher. The very conditions that the BOJ wants to see fulfilled. So if that happens, I think that the markets are kind of remarkably complacent as to how far the BOJ can go here. We had a BOJ speaker earlier this month outlining the possibility of a neutral rate being 1%. The markets are not positioned for it at all, which means that the yen has plenty of scope to go higher from here.
Ven, thank you, as always, for joining us. Bloomberg MLive's Ven Ram. Now, coming up later, a Bloomberg surveillance special, The Fed Decides. You can catch that 6:30 p.m. London time. Coming up, BlackRock teams up with Microsoft to raise billions for AI investments as they look to bankroll the huge demand for data centers and new energy. We have the details next, and this is Bloomberg. Well, BlackRock and Microsoft are teaming up on one of the biggest efforts to bankroll the building of data centers and energy infrastructure pivotal to the AI boom. Now, the companies will seek $30 billion of private equity capital with the aim of leveraging the money to bring in as much as $100 billion in potential investments. So let's discuss all of this with Tom Metcalf, Bloomberg's managing editor for finance and investing in EMEA. It feels, thank you, Tom, for joining us. It's huge. This feels similar to what we heard Brookfield do with Microsoft, but this was on the energy transition. What are these new deals? There's many stakeholders, many shareholders, and it's just to be able to build things.
Yeah, exactly. I think it's just a sign of just how much capital is needed, right? So 30 billion effective equity here. Even companies like a Microsoft or a BlackRock are not going to get that themselves. And I found some of that wording you just brought up quite interesting. We'll seek 30 billion of private sort of equity money, private capital. And I think that's probably a sign of what this partnership is looking to do. around the world, you've got Microsoft on the West Coast, BlackRock on the East Coast, obviously the Middle East, Eastern unit, I think, from Abu Dhabi. And it looks like they'll be, probably, working those Rolodexes to make sure they hit that 30 billion. And as you say, leverage that up, and then they've got 100 billion with which to make investments. And that's why you see these kind of interesting structures, a bit more complex than usual, just because of the sheer amount of money that they think is needed to, power the AI sort of revolution.
So what do we know about Microsoft's role in this? Because BlackRock is basically going, they have the contacts, they have the private equity, experts, they're asset managers. So they're raising the funds, maybe putting some of their money in. What's Microsoft's role? I
think Microsoft, in part, I'm sure Microsoft will put in quite a bit of money as well, but also their expertise, right? They are the ones on the front line of the AOL, one of the big companies in it, and obviously have those connections with OpenAI as well. So, and I think that's what you need in something like AI, right? You need to have a sort of trusted partner who is, putting their money where their mouth is, but critically going, this is sort of technology that makes sense to us. And then, in the Middle East, I suspect, MGX's role is bringing that sovereign wealth, that very patient capital, and the kind of investors that literally can write, 10-figure checks, perhaps. No.
I mean, it makes sense. It's kind of like almost brand recognition, right? I know who I want to invest with. It's like two names that I trust in finding the right infrastructure for AI.
Yeah, exactly. I mean, you look at the expertise everyone's bringing, right? That is very reassuring to have a BlackRock in the mix, just as Microsoft's AI skills are. And similarly on the sovereign wealth front side, you want someone who, moves in those circles and is genuinely in that space. So it's kind of interesting. We're just starting to see these models, these structures develop, and they do make a lot of sense. But I guess on the flip side, you're looking for sort of the downside. There is that extra complexity. I love simplicity. I like one company, one name, and instead here you're going to have lots of stakeholders. So it'll be interesting to see how it goes.
So interesting. Tom, thank you so much. Tom Metcalf there with the very latest on this new deal. Up next, Bloomberg Brief, Danny Berger in New York, and this is Bloomberg.